Okay, so this is essentially the tax return that we just looked at. This is the formula for calculating what tax is for a corporation. You'll notice there's no adjusted gross income. There's no concept of adjusted gross income for anybody but individuals. There's no adjusted gross income for partnerships, none for C corps, S corps. That is solely limited to individuals. So we don't have that concept here, which means we're not, it doesn't depend, our credits or deductions, well, I shouldn't say that. Some of our credits or deductions may still be dependent on like our taxable income. But we don't have like this, it's dependent upon our adjusted gross income. So some of the differences, and this is what we're going to talk about here, some of the differences, different concepts that are unique to corporations. Capital gains and losses, this is way easier, by the way, than what we talked about for individuals. Remember, we had the short term and long term and the netting and the different tax rates and all that stuff, and the $3,000, we could take the losses up to $3,000. We don't have any of that for corporations, okay? There are some different rules with regard to losses, but we don't have a lot of those complexities we do not have for corporations. Dividends received deduction, which I alluded to when I started talking about this chapter. We're going to go into detail about how that works. Charitable contributions as well. So the amount of charitable contributions that are deductible to the business is limited to taxable income. So we'll look at that calculation. And there are some other little miscellaneous items as well. So capital gains and losses. Doesn't matter if they're short term or long term, there's no difference. So we don't have to necessarily keep track of short term and long term. I mean, you still got to enter in when the stock or the asset was purchased and then when it was sold as well. And remember, for individuals, we could deduct up to $3,000 of capital losses against other types of income, right? For corporations, though, we can't. We cannot take capital losses. The only thing we can do is offset capital gains in other years. So we can go back, if we experience a capital loss as a corporation, we can go back 3 years to offset, and we would have to amend our tax return to offset capital gains in those years, or we can go forward 5 years. We can carry it forward 5 years if we don't have anything in the past, any gains in the past. But our capital, we can only have claim capital income only claim capital income, no losses. The best we can do is 0, right? So it cannot be negative. Carry back 3 preceding years. We start with the earliest year. If we didn't have any gains in that earliest year, then we would go to the next earliest year. We can only go back 3 and forward 5, though. They can use the carry back and carry forward only against net capital gains in the years noted. So if they didn't have any capital gains previously, and they don't have any capital gains 5 years into the future, they just don't get to take advantage of the capital losses. This is another one of those areas that creates a difference between book and tax. Because if we have a capital loss for book purposes, that's gonna be on our financial statements, right? If we experienced a loss on the sale of an asset, but we can't take that loss on our tax return. So that's gonna create a difference as well. And this is only for capital losses. Operating losses are treated differently, and we're going to talk about that as well a little bit further into the chapter. Those are called net operating losses. They have different rules. These are capital losses, okay? So we've got, here's an example. ABC Company, formed in 2018, reported net income in each year of its operation. They had net capital gains and losses as follows. All right, so they had gains in all of these years, but then in 2023 they had a loss of $21,000. What we would do first, that $21,000 loss, so 2023, we're going to absorb it first going back to 2020. So in 2020, we had a $10,000 gain. So we're going to amend our tax return, and we're going to take that capital loss when we amend that tax return. So now we're at an $11,000 loss, right? 2021, we had another gain of $1,000. We're going to amend that tax return. Now we're left with $10,000 of loss. In 2022, we had a $5,000 gain. We're going to go and amend that return. Now we're left with a $5,000 loss, which carries forward to the next year or the next year. Up to 5 years, we can use this to offset future gains. Okay? I was just saying, I've got a $5,000 capital loss to carry forward. Let's see this one here. This one's a little bit trickier because we've got losses. That one was fairly easy because we just had one year that was a loss. This one, in 2018, they had a $2,000 loss. That was their first year, so they can't go back, right? So 2018, 2,000. We got to carry that forward. We're going to carry it forward to 2019. So we've got a $7,000 gain. We're going to carry this forward here. Now we've got a $5,000 gain. We have no more loss carry forward. Let's go to 2020. We've got a $10,000 gain in 2020. 2021, we have a $16,000 loss. All right, well, we're going to take 5,000 of that to go back to 2019 and amend it. So 5,000, and this is for 2019. It gets absorbed. So now we're left with 11,000. We had a $10,000 gain in 2020. So that's going to go back there. 10,000. This is for 2020. We're going to amend that. Now we're left with a $1,000 loss, which we can carry forward. Okay? In 2022, we had a $5,000 gain. So we're going to use that from 2021. Now we're left with, we only have to pay tax on a $4,000 gain in 2022 because we absorbed what was remaining of this carry forward. In 2023, we had a $14,000 loss. All right. We're going to take 4,000 of that, and we're going to go back and we're going to amend the 2022, which means, so 4,000, 2022. Now we've got a $10,000 loss that we get to carry forward to future years. That's a little bit more complex. It says the same thing essentially. So a $10,000 loss carry forward can be used starting in 2024. We absorbed all of the gains from prior. with those other losses, but we're left with a $10,000 loss that we can still use. Only capital losses. Okay, so if we don't have any capital gains, we're not gonna get to use that. Again, you file an amended return. No special tax rate on capital gains, doesn't matter if it's long-term, short-term. 21% tax rate on everything for corporations. That part's super simple, right?